This is the most important real estate news we've received in years. Two major changes are going to reshape the housing market. So if you like what you hear, do me a favor and hit the like button. If you don't, let us know down below in the comments why. So we're talking about two major pieces of news that came out last week.
Major, and I'm super excited because it's going to change everything.
Change everything. I love that statement. It's one of those like TikTok things, and you have to pay attention to the rest because this is important.
Very important.
Okay, cool.
So first question is, what is the first headline that's shaking up markets right now?
Okay, so last week, we're talking about, what was that, the first or second week of December? Of course, it took a Trump tweet. January. Did I say December?
Yeah.
Okay, I'm a month behind. So
2026 now.
2026, okay. So Trump tweet came out that said that he's going to limit the institution's ability to buy homes, right? Mm-hmm. And I know this has been a hot topic for a couple years. So this is huge news.
Yeah, absolutely. So when we hear institutions, who are these big institutions, and where are they buying, things like that?
It's funny. I looked this up, and they're buying all over the country. Okay, these big institutions. The one that most people will be familiar with is BlackRock. Mm-hmm. Blackstone, I think.
Blackstone and BlackRock.
BlackRock. You have some other ones that are in there that buy a lot of homes. Mm-hmm. And people have said, they don't buy that many homes, right? Mm-hmm. As a percentage, it's low. They're the largest single buyers of homes in the entire country. Mm-hmm. So it's a lot of them are buying these homes. And so they've actually been, the good thing about this, and people don't give it credit, but they've been keeping, if you're a homeowner and you want your values to stay high, they've been keeping prices higher by coming in and buying in the market, mm-hmm. right? Just like a stock, if the price starts going down, if there's a big buyer that comes in, it keeps that price higher. Mm-hmm. Artificially or not, it still happens.
Yeah, absolutely. And it depends which market you're in, the percentage of what they're buying. But you see in a lot of the urban areas like Atlanta, St. Louis, and Phoenix, I've seen them up to 15%. So why do you think this is the case?
A lot of people aren't going to like my answer on this. Okay.
Oh, no.
Yeah, I know. So listen, these same cities have a lot of social unrest, right? Mm-hmm. Now, I'm not saying the big institutions are paying for the social unrest. I didn't say that. But think about this. How do you if you want to buy a house and you want to get a lower price on it, if you want to buy a lot of houses and you want to get a lower price on it, it wouldn't hurt there to be social unrest in that area because price values are going to go down. And if you come in and buy it, you get it at a lower price.
Gotcha.
So I'm not saying BlackRock has caused the social unrest or that they're financing the people that support social unrest by, the anti-police movements or all these other things. But it's certainly a possibility that they're benefited by them. So I'm not saying they did it.
Yeah.
But I'm saying they're benefited by the fact that people want to sell and they get a lower price, right?
It's supply and demand, right?
Supply and demand. Or maybe they just took those markets because this happened and they said, these are our opportunities. So totally different things. So they're coming in, buying lots of homes, and then they'll put renters in there. And maybe they're already investors that own these properties and they're just buying them from the investors. So the good thing about the investors buying the house is that it's kept prices high. Now, there's a lot of people that say if they weren't buying it, the prices would come down and affordability would be better. And that's also true. So he's saying, look, if you're going to buy a house, you shouldn't have to compete against a huge, massive corporation with lots of money. So hopefully that will make things a little more reasonable. It could make, if that thing was in it by itself, it could drive home values down a little bit because you have less buyers in the market. It's said that they're typically 2 to 5%, maybe as high as 6% of the buyers out there. And most people say, well, 2 to 5% isn't a lot. Yeah, but there's a multiplier effect in price. If you remove that 2 to 5%, price would come down by an aggregate of that.
Gotcha. So what you're saying is we should buy some beachfront property in Venezuela?
If I had extra cash right now, it would still not be the time. There's still a lot of social unrest in Venezuela.
Okay.
Not quite there yet.
Gotcha. So do you think this really puts downward pressure on homes, or do you think we'll see prices rise not as fast?
Okay, so you have a supply and demand. If the demand is the buyer and there's less buyers in the market, you have less demand. Supply is at a normal, in most parts of the country, it's a normal supply. It was depressed a couple of years ago. We only had I remember at one point in Brevard County, we only had 400 houses on the market. And we've had as much as 12,000 houses on the market. And I've said this before in past podcasts. It's well documented. But the fact is that you have less buyers out there, technically equilibrium might fall a little bit on price, but that's in a vacuum.
Gotcha.
And so there's other things that we want to talk about in a minute that actually might counteract that.
Yeah, absolutely. And then say this does come into effect. How long do you think it'll take for buyers to see this kind of effect in the market?
Well, I don't know how he's going to do this. And my concern is not politics here, right? I don't have any control over what happens in politics or policy. I have very, very little control. We as a nation, we individuals have votes. Sometimes, we don't even have that depending on what the policy is to be put in place. But I can't control any of that. The only thing I can control is what I do after the fact. So how long it's going to take to be put in place, I have no idea how that's going to happen. Is it going to be an executive order? How's it going to be enforced? How's it going to be policed? I have no idea. So I really don't know. I wish I had there's not enough info on how that's going to happen yet for me to give you good info out there. But I just know that is going to be a changing factor in our market.
Yeah, absolutely. If you take 5% of the buyers out, it definitely is going to make a huge impact. So let's talk about the flip side now. So what is the second hardest hitting item we've seen in the real estate market in the recent weeks here?
Well, also last week, January 9th or 10th, 2026, Trump came out with a tweet. It's typically a tweet. Let me preface this with last year, if you look at where mortgage-backed securities are, now that's where when we do loans, they get securitized by the property and sold off as a bond to investors in a tertiary market. And the price they get for that typically dictates rates on the street. And if there's more buyers than there are sellers, price goes up. If there's more sellers than buyers, price goes down. That's of the bond. Mm-hmm. Now, there's an inverse relationship between the price of that bond and the yield. So the higher the price, the lower the interest rate. The lower the price, the higher the interest rate. I can go into deep detail on that, but just understand there's an inverse relationship. Okay, yeah. And so the last 3 years, the Federal Reserve, they had trillions of dollars of these bonds on their books, and they were selling them. They're the biggest seller, and they are a big seller. Mm-hmm. And that was putting upward price pressure on the rate. So the rates were going up, and they stayed artificially high because of all these sellings of this bond.
And what time frame was that?
That was, I think, a mid-2022 up until December 1st, 2025.
Okay, gotcha. So
and so they kept rates artificially high. Rates were in the 6s and 7s. There's those numbers, again, the kids love. The kids. I got so many of them. But those are so those are like it's 6s and 7s, right? Mm-hmm. And then we had some pockets lower with maybe points in the 5s or better. But here's the thing. Is that without that huge sell pressure, and what Trump announced last week is that he would authorize his representatives to buy $200 billion of mortgage-backed securities. Mm-hmm. Well, now instead of selling $40 to $50 billion a month of mortgage-backed securities, which is what the Federal Reserve was doing for the last 3 years plus, you end that, so that's a huge difference, and then you buy $200 billion. Now you have a bigger pressure on buying. And other investors around the world will want to buy too. And they'll want to front run, possibly, the traders want to front run the United States government and get in before they do. So this will bring buyers back to the mortgage-backed security market. It'll put downward pressure on the rates, and it'll create better affordability in the form of better interest rates for the borrower. The borrower gets to benefit, the end user, right? Mm-hmm. And this is actually a stimulus for our economy, because if the average homeowner has more money in their pocket, they have more money to spend, all right? They could save it, they could pay debt, or they could spend it, all of which creates more liquidity for our markets and is good for the economy.
Yeah, absolutely. So there's some questions on who's actually buying.
Right.
So is it the Fed? Is it Fannie and Freddie? So do we have any intel on that?
We have a lot of speculation. Okay, Fannie Mae and Freddie Mac have combined about $190 billion of near liquid assets on their books. In other words, they have the room for about $190 billion in purchases. Is that exact? No. This is all based on numbers we've aggregated from the different news articles out there. The Federal Reserve has the ability to buy. When they buy, they print money, right? That typically causes inflation unless there's not an inflationary concern. It does change the mandate of the Fed, and the Fed has been buying treasuries, 10-year treasury notes. They call it, they didn't call it quantitative easing because that would send shockwaves to the market. They called it like a debt restructure or something else. They called it something else, maybe not a debt restructure. I can't remember what they called it, but they just change words around. But the reality is they're buying treasuries. They soon may be buying mortgage-backed securities too.
Gotcha. So last time we bought mortgage-backed securities, what happened?
Last time we bought mortgage-backed securities, I don't know if you remember 2020 and 2021. Rates, when we bought $1 trillion worth of them, rates went down to the threes.
Yeah.
Okay. Rates went down to threes. And what I was saying before is what I said last year about mortgage-backed securities is since 2022, mortgage-backed securities, the price of it hasn't gone. There's been a ceiling of resistance, across that pricing of that bond. And we bumped up against it once, we retested, failed, came back down, bumped up again a year later, retested, failed. And since then, we bumped up against the ceiling several times in an increasing rate. And what that's done is this was the catalyst. Trump tweeting out, hey, we're going to buy $200 billion mortgage-backed securities. This was the catalyst. Even though they haven't done that yet, traders came in and they bought. And we busted through that ceiling of resistance. Remember the inverse relationship. The higher the price of that bond drives the interest rate, the effective yield on that bond lower, the interest rate lower. And so we busted through that significantly. We're back testing. Now that ceiling of resistance becomes a floor of support. I know this is very technical stuff here, but just know this, is that rates have gotten better. And the government hasn't even come in and bought their $200 billion. People have tried to front run the government like I suspected, and now it's retesting those prices, and I believe we have a lot of upward movement to possibly hit for rates to improve.
Gotcha. So for buyers sitting on the sidelines, is this something to wait on, or do you think it's just something to be aware of while they make their purchases and plans?
This is something to be aware of because rates have already improved. And we could back test this floor of support. The rate of the bonds, I should say, the rates for interest rates on mortgages might go back up in the short term. And depending on if the government actually does this purchase or not will depend on if they go down. But rates have improved. If you like the rate you see, take it. Take it fast because it might be a while before all this other stuff happens. It might happen quickly. Now, here's one thing I certainly know, Nate, is that we're in a midterm election year. Whether you like it or don't like it, like the president, don't like the president, want him to succeed or want him to fail, every sitting president doesn't want to lose a midterm election, okay? And most presidents in futures or pasts have all pumped money or tried to pump money any way they could during a midterm year. We're in a midterm year. Money's going to pump. The only difference between this president and another president is who they pumped money to. And so we're going to see money pump. And when money pumps, typically it pumps through better rates, through asset purchases and things like that. So the homeowner might benefit short term through the lower interest rates or more options because if people get better rates, they're more not locked into their home at 3%. If the rates are 4 or 5, they might say, look, now's the time to sell. So the benefit is, number one, that if the institutions are stopped from buying, that's going to cause pricing to come down. But there's a backstop because if rates come down, that'll drive more demand in the marketplace and kind of hopefully keep an even keel on pricing and not have it skyrocket.
That's what I was going to ask you, if these two things kind of weigh each other out and what your predictions kind of are on that front.
Time will tell, but 2 to 3 less % buyers in the market because of institutions versus all the people that would want to buy. I think the institution not buying is a way to help keep pricing in check while allowing buyers to come in and buy the house with a lower rate. I think we're going to see more net buyers come in because of that. But I think that was a good stopgap in order to, and I don't know if it's legal or not. I'm not here to judge that. I just can react to the laws and rules that are put in place. And if there's less buyers over here, but more over here, supply and demand tells me pricing is going to go up.
Gotcha.
But not as much as it would have had the institutions been buyers.
Copy. So 2026 is off to a blazing start, especially for the housing market, especially here in Florida.
Right.
Any last final news?
Yeah, we're feeling that already.
Yeah.
I mean, typically we don't get busy till after the Martin Luther King birthday, which is like 18th?
It's like the third Monday, technically.
Yeah, third Monday of January. Typically, that's kind of the starting point where we get busy. We got busy week 1 in January.
Yeah. Yeah.
And we've been feeling the people, or I should say after last week, we had people we haven't talked to in a while calling us for a refinance or a mortgage. If you need help with any of these things, please reach out anytime. The information's below. If you're in the state of Florida, we'd love to help you. But the reality is that people have been on the sidelines for a while, and they're ready to go. And that means that you're going to see, if the rates come down, you're going to see competition again for homes. Now, hopefully it's not with institutions.
Yeah.
And you're going to see competition. You're going to see less concessions. You're going to see a slightly not as favorable for the buyer environment, except the rates will be better.
Yeah. So this is just the tip of the iceberg. There's
Tip of the iceberg.
a lot more to come.
A lot more to come, so stay tuned. And like I said in the beginning, if you liked what you heard or you liked the way we presented it, do me a favor, hit the like button. If you didn't, leave in the comment why. Can we do better, or what didn't you agree with that I said here during this time? That's all I got, man.
Thanks, Joe. Signing off here.
Thank you.